Before we sit down with this week's market analyst, I want to take a quick look at the crop and harvest numbers. The USDA says the corn crop is 34% harvested. That's up 8% from last week and up from the pace of 21% this time last year. Missouri, North Carolina, and my home state of Tennessee are the closest to being finished with harvest. For soybeans, harvest is at 32%. 91% of the crop is dropping leaves. Lots of news in the livestock market, too. Our market analyst this week is Dr. Derrell Peel. He's an agricultural economist from Oklahoma State University. Thanks for being here, Derrell.
Happy to be here.
Starting off, I'd like to get your take on the new deal that will replace NAFTA. Now, for those watching who aren't familiar, could you tell us the nuts and bolts of this deal and what it ultimately means for farmers and livestock producers?
Well, this is an important deal. I think the biggest contribution of this is simply to get back to NAFTA to a large extent. We're most concerned, I think, generally in agricultural about preserving what we had before. We got that back. It does go a little farther than that. So dairy markets and a little bit in poultry and egg markets, there's a little bit of increased access. There's a few other things. There's a little bit of change in some wheat grading and some other things. But by and large, I think the biggest contribution of this is just the certainty that comes from having a deal in place and having essentially the same deal we had before.
And yeah, of course, Canada being a big part of that deal, and you were quoted in a recent article talking about how Canada's drought has really opened up the market for U.S. producers. Could you give us a breakdown on that?
Well, Canada has experienced drought issues in the western part where the bulk of the cattle are this year, much as parts of the U.S. have. And so, I think the impacts on the Canadian market have been largely, I would call them, mostly management headaches, some feed shortages, hay prices are higher. They've had to move some cattle around, no doubt. I think from a broader market standpoint, it probably hasn't had a huge impact in terms of a lot of additional liquidation. Perhaps it tempered some of their, herd growth a little bit. Canadian cattle numbers were down a little bit as of July 1 this year, the beef cow herd specifically. I don't know that this was the major part of that, but it probably played into that to some extent.
And weather right here at home, also a big story with Hurricane Michael, massive storm. Do you see that causing any disruptions to the market?
It'll have some impacts as far as beef markets or maybe meat markets more broadly. I think, there's sort of two issues. What does it do to the supply side? What does it do to the demand side? I don't think the supply side impacts will be huge, especially for beef, unless we get into something really unusual. Cattle were to get caught and drowned or something, but the numbers would still be relatively small. So I don't see that as an issue. On the demand side, clearly these things cause massive disruptions for a period of time in restaurant business in those affected areas. Some of the meat trade, obviously flow of products. So it does have some demand impacts. It's going to have bigger impacts in general in other markets. And, you look at the southern crops that are, for the most part, not very much harvested yet, cotton and peanuts and to some extent soybeans. Those markets will be more impacted. I think, again, it's probably just a very short-run phenomenon for meat markets in general.
We're into the final quarter of 2018. What's your take on the current state of the U.S. cattle market, and what predictions do you have heading into 2019?
We've continued in 2018, much like we did in 2017 in a general sense with, increasing beef production, still growing cattle numbers. So you've got supply pressure there, and yet prices have held relatively well. In fact, they've held very strongly. Demand has been good, both domestic and international. And so as we finish out 2018 here, we're going to continue that. We've got fed cattle and feeder cattle prices, for the most part, at or above year-ago levels. And so now the feeder cattle, maybe the lightweights are going to be a little bit down from last year because we had such a strong fourth quarter last year. But by and large, we're in good shape finishing that out. Going into 2019, we're going to continue to see modest increases in production. The pipeline is still full of feeder cattle. Even if we stop this herd growth going into 2019, potentially, we're still going to see more beef production in 2019. So we're still focused on demand, both domestic and international demand are key to working through these larger supplies. The trade data continues to show that we've had a stellar performance in terms of beef exports, and that has really helped out the market a lot.
And I know that marketing, risk management, two of your main specialties. What are some of the main questions that farmers have been asking you this time of year, and what do you tell them?
Well, you know, here in the Southern Plains, we're looking at wheat pasture this time of the year. It's always a trick to get it produced in the first place, and we've had lots of rain, and we've got some pretty good wheat pasture underway, and in fact, it's going to be grazable in the near future. So I'm getting lots of questions, working through those projected budgets for winter grazing. Those prospects, by and large, have looked fairly attractive this year as well. So producers are talking about, doing that, what kinds of risk management they can put on those calves for the spring markets, those kinds of things. And in general, I think producers are keeping a handle on this, on the herd growth and kind of what our prospects are, not only for 2019 but beyond. And so we're looking at, herd growth appears to be slowing here in 2018. It may peak as of this next January, or it might grow slightly again next year and then perhaps peak in January of 2020. So they're watching that from a longer term perspective to see if we can kind of top out here and not necessarily get into a situation where we, cyclically push prices lower and get back into that cyclical liquidation that we have so often done in the past. We actually seem to have some prospects this year to have what I'm calling a soft landing, kind of by sort of plateauing these numbers, holding them relatively stable, and all of that depends on demand continuing to be a very strong factor.
And finally, with the new farm bill in limbo, do you see the livestock market feeling any effects from that?
Well, I think the livestock market impacts are, as they typically are with a farm bill, are less, less significant, perhaps less, timely in some sense, or time sensitive. There are some things in the farm bill that will be important. There are some tweaks to some of the forage risk protection and livestock indemnity protection programs that may be important to producers. There's also obviously some animal health related things, funding for the disease or for the vaccine bank, for FMD, those kinds of things that the industry has a very keen interest in as we go forward. And so there are some important things. I don't know that from a day-to-day program standpoint there's a lot that the beef industry is concerned about at the moment, but clearly looking at those longer-term program components.
Dr. Derrell Peel, we always appreciate your insight. Thanks for being here with us today.
I'm very happy to do it anytime.